Are you long gold? Not so fast. This is Brian Lewis from MMT Investing, and things just changed. So I've been tracking the S&P running up all day to test the financial crisis long-term bull market trend line. It's running right up underneath it and backtesting it again for the second day in a row. This is a huge bear signal. I'm ready for a massive reversal to the downside. Um, and everybody is trying to protect themselves with gold right now. Is that a good idea? No, not for the next 2 weeks. It's not. So here's what gold does in the middle of a credit drawdown. Here's the crash. Boom, gold crashes right with everything else. But then on the upside, gold rallies like crazy. So here's what's happening. Gold, when it draws down, people have to do margin calls. So everyone has to sell their gold in order to cover their losses. So when you have a big drawdown, gold price is just dropping and dropping and dropping. These people don't want to sell their gold. They have to sell their gold because they don't have the funds to cover their margins. And then when you get a bounce, everyone's just racing back in as fast as they can. So if we go over to, oh, no, chats, where's my, there you go. So yeah, if you go over to the S&P, you can see, let me show you this trend line, and let me show you my targets, because I have exact dates on these. My plan is to go, I did click on it? Yes, okay. Just very slow internet. I'm in South Africa right now. I came out here on safari, and now I'm in a little rental house, and they're doing quarantine lockdown, so I'll be here for a little while. So it's a good time to make some videos, I guess. It's a really good time to make some videos because this is an absolutely crazy stock market that we're getting right now. So yeah, here is our 2008 financial crisis trend line, and we just reversed, ran across the bear line, and just back tested this trend line twice. Like, it's running right up to it on close today. Incredible. So I think, so probably now tomorrow we're either gonna gap up here, and that is gonna be the bull trap, and then it's just gonna scream down from there, or we'll come back down and test the bottom again, and then we'll run up here and check it again. I still think we'll probably come back down and check the bottom again before we break out of here, because I have the reversal date on April 13th, because here from the top, it's Feb 20 to the 23rd. This is 31 days. So this is looking like it's going to be 3 times this length for the credit cycle. So get out of my way. All right. So yeah. So if we pull down here, let's see. So here's this is a very strongly established downtrend line now that we got this wedge. And then the breakout. Okay, so, and now we just got the double back test. Like, this is this is just textbook credit drawdown. So this is going to be a 3-month credit drawdown, like right on the dot. We got 31 days here. So then I went out another 31 days to the intermediary bottom, and another 31 days out here to the end of the cycle bottom. And I just went right on the trend line because that's kind of the most obvious guess for where it's going to go. But also, it just so happens that this downtrend line and this bottom support level cross right on that day. So I mean, that's the only target I can even see picking here. That's the only target. That makes sense. And then probably get another bull trap here, and then down to the bottom here. And this one could move quite a bit uh, up or down depending on the situation of everything 2 months from now. Who knows what could be going on? Um, but anyways, we were talking about gold. So gold right on this scream down right here is not a good spot to be. That's going to go down right with everything else because everyone's got to sell it on margin calls. But right here on the way up, the next 2 weeks on the bull trap is exactly where you want to be in gold. So that's my plan actually, is to go short tech basically here, long gold here, and then short tech and anyone else who might go out of business here, and then long gold and I don't know what. After we get out of this credit contraction, well, we should have a blast up before we get into this ridiculously long, probably 2 or 3 year bear market to reverse down off of this everything bubble. So I think gold is probably going to do absolutely great on the bull bounces here. Yeah, so the bull bounce that we get after this drop and then this reversal, gold will be great. And then gold should be pretty bullish this entire time. And I have a feeling that gold is going to hype up and it might be our next big bubble. I don't know, if you look at Bitcoin, if you look at silver, both of those look like they're still coming down off of the last bubble. And downward economy isn't great for silver because all the commodities will drag silver down with it. So, I mean, I think silver will get pulled sideways or down for the next 3 years. I was really interested in silver last year, and it never made sense. And now we get this whole picture here. So, I am actually pretty bullish on gold now, long term, but short term, gold is an intermediate play in between the shorts. So, I mean, yeah, the next like 3 days maybe gold, and then get out of the gold and go short tech, and then long gold to the top of the bull trap, maybe 3 more weeks, and then short everything to the bottom. That is my analysis on gold. And let's take a look at a couple of options for gold here. There's the most popular option, GLD, which is the huge gold ETF. And I don't know if you've looked into GLD, but the custodian of GLD is HSBC, who is literally bankrupt right now. The Fed just opened a Eurodollar repo market because the repo market we have right now is not even sufficient to get money out to, like, Deutsche Bank and HSBC are going bankrupt, and the Fed can't get money to them. And the Fed definitely can't get money to the companies that they're failing to service all over the world. So there's this huge credit contraction on right now, and it doesn't matter how much the Fed pumps. They just can't get money out to the people that need it. And yeah, and so they're opening all these different programs trying to, basically the Fed is trying to step in and open channels to service people that these banks are either failing or refusing to serve right now. So this is a 3-month massive worldwide credit drawdown right now. Like, it's worldwide contraction on credit. And the only place on earth where people are still like delusional that stuff is going to stay up is America. Like, everywhere else on earth, everyone has accepted the health situation. Everyone has accepted the recession situation. America's still pretending like none of this stuff is happening. So yeah, back to GLD, whose custodian is a bankrupt bank that can't get money from the Fed. And I don't know if they can go bankrupt or if they'll get bailed out. I don't even know if the Fed has the ability to bail them out. I don't know what would happen. Anyways, I think GLD is a really, really risky place to invest in gold. Like, I mean, obviously, the best thing to do is to have physical and vault it in safe places or have your own vault or something like that. But it's really hard for most people to do that. And GLD is just scary. I think for day trading, GLD is good because it's just super popular and it's easy to trade and it's easy to get options on it. It's like maybe for the next 3 days, uh, if I move out of some shorts at the bottom end, I might go up on GLD, but long term, I would never keep my money in GLD. Um, this is the one that I think is the least risky for a longer term gold position. It's the Sprott Physical Gold Trust. Uh, this this is vaulted in Canada, and they have physical delivery, and it's one-to-one ownership of the gold. And the physical delivery probably uh, isn't very reliable. Like I think it takes months and months and months to try to get a physical delivery, especially during the craziness. So I wouldn't buy this expecting to actually get physical delivery. Um, but as far as it being solvent and uh, and like actually having the gold that you have a share on, I think this is a good option. And I'm not affiliated with them in any way. But I just think this is safer for gold positions. And I'm going to be playing in and out of gold during this crash and during the recovery. But I'm only going to be gold on the ups. I'm going to be short on the downs and gold on the ups because gold will pull down with everything else on the crashes just because of margin calls. Um, yeah, I hope that was helpful. This is not investment advice. Do not listen to anything that I say. These are just ideas. This is how I'm trading it. And if you would click the like and subscribe buttons to help me out with the YouTube algorithm, that would be very much appreciated. Happy trading.